Good afternoon. This is a trade review for NEI for May 19th. This is the kind of video I just hate doing, and the reason being, it means if I'm doing a video like this, we have suffered a pretty decent sized loss due usually to not sticking to our rules and just trading stupid and fucking up. And that's essentially, in review, what we've done on NEI. So doing this video to see if we can, learn some lessons from this and try to apply them to our trading going forward. NEI, looking back on this, in recap the news today, EMC, they decided to dual source a product they get from NEI, which means NEI is going to lose about 10% of the revenues, and the stock, of course, is getting hammered down 40 cents. Granted, now we know why the stock has sold off over the last 3 weeks. This news was obviously leaked to people in the know that would explain why on the earnings beat that the stock got hammered. We had ample opportunity to get out of this one, but, I let us fall in love with a stock, and that usually is doom for a trader. And remember, we are traders, not investors, and that is one big lesson to learn from this screw-up. When we had the drop on the earnings report, stop, obvious, if we were watching and paying attention to the chart, 190 was a stop level. Even then, when we saw this consolidation, that break of $1.70, we should have run for the hills. If we had done that, sure, we would have had a 20-cent loss on it. Hell of a lot better than having a 50-cent more additional downside loss on it now on the news. Is this sell-off, overdone? Of course it is. But you had a lot of traders, just like us, hoping and holding. And, today's news was just the straw that broke the camel's back. And down she goes. So, what do we learn from this lesson? Listen to the charts. We are traders, not investors, One of the good things, if you're to look at that, the glass half full, is we need to get slapped in the face with trades like this so that we stop doing bad habits. And a bad habit that I've gotten us into is trying to ride and maximize our gains out of plays when all we are slice of the pie traders. All we look for is one or two slices of the pie. We don't look for the home run. The home runs will come. Lately, we've got caught up in selling stocks for gains and then crying when we see them continuing to move. Back to the small gains is key mentality, at least in this really crappy market we find ourselves in right now. So where do we go from here? If you're still sitting on NEI in your long-term accounts, really at this stage, $1.18 we're looking at right now, what more downside is there? The upside, at least on the long term, is probably a hell of a lot better at this stage. What I would probably look to say is, if you need the cash, sell a third. Sell another third or all on a break back above $1.30. Otherwise, sit and wait for the chart to finally wash out whenever that may be. Just ugly looking at this right now, and really annoyed that we got trapped up on this long-term mentality when all our big gains come from day trading, scalping intraday, or swinging for a few days. Back to the rule that I've stuck with over the years that we've sort of, ignored over the last couple of months. 3 week shelf life. Stock after 3 weeks, see you later, bye. We can always re-enter it again for another trade, but, 3 week or even a 2 week time frame, taking scalps when they come. This is a stock. Even with this ass whipping we've taken on this stock, if you've traded the moves that we've had over the last several months, we're still up big on it. We gave back a crap load of those profits over the last month when we should not have. We've had ample chart areas to get out of. Another lesson to be gleaned from this, recall I've mentioned, over the last year plus, every time we got stochastics down under the 20 level, the stock popped every single time, and that was the reason we jumped in again. This is another reminder that nothing is 100% certain in this market, and this pretty much just proves the point yet again. Here we had a 100% indicator on what has happened it has failed. So there is another valuable lesson to be gleaned from this NEI disaster. So where do we go from here? Well, some changes I'm going to make. 3-week shelf life on plays. No more long-term plays, or at least continuing to hold and hope on some of these plays. Half position stance right now and just staying high cash. This is a very difficult market, in case you haven't seen over the last couple of weeks. Market might be slowly moving higher, but stocks are just not acting like they should act. So, I mean, this is a take the small game first, ask questions later market. If there's any smoke, we bail on a stock. I mean, there was lots of smoke on this stock over the last couple of weeks. Why the hell was it down on a great earnings report? Posted profits, etc., etc. Today's news, that tells us exactly why this stock was down over the last couple of weeks. Someone knew what was going on. And, we're always the last ones to know. So, this blows. It sucks. It's a painful loss. But, we're going to take our lessons from it, learn from it, apply it to future trades, and make all that money back when the time is right. Remember, I've said it many times, it sucks, but the best trading lessons a trader will ever get are on situations like this where you get your ass handed to you, you learn what happens, and you move forward. So hopefully you guys will learn something from this short little video, and that's it. Goodbye.